Hey everybody, Jonathan Broadbent here, your host of UnWoke Academy. We're doing something a little bit different this week. I've added in Substack. If you're not already aware, I actually had decided a while ago to use Substack pretty extensively for a lot of the long form posts that we do, the edited videos, you name it. It's all pretty much all available on Substack. So right now we are the usual live on Facebook, YouTube, X, Rumble, and now Substack as well. If you are on one of those platforms and are so inclined, if you have a question, thought, or comment, share it in the notes, and I will do my best to incorporate that into today's discussion. So, if you or somebody you know has gotten involved in any sort of professional service, from accounting to legal, medical, doctors, you name it, you're probably aware of the idea and having to make the argument that it's a fake, it's a false idea that bigger is better. There's this constant push in pretty much any sort of professional environment to get into the mega firm, the big giant firm. In my case, it was Wall Street. And I fought my way on years ago. Actually, it's more technically correct to say that I was recruited very heavily by Wall Street. I made my way up into larger and larger firms and was doing more and more. And that led to me getting on the spotlight of and the radar of some other people who then recruited me. And I was really excited for a while to be recruited onto Wall Street. I worked there in a niche within finance that has everything to do with I know this gets a little bit technical, and I'm going to quickly get past the technical elements so that we can get on to the heart of the matter that we want to discuss today. But the area of expertise that I have focuses on the management of other people's money. Anytime there's a large pool of money, and if you think about endowments at colleges or large pension plans or union or trust accounts or those sorts of things, when you get into managing other people's money, there are specific rules and things that govern that, of course, then there should be. And it should be as transparent as possible. So if you think about just imagine somebody you know, or could be you. If you work for a state or municipality or something, and you put into something like a public employee retirement system, or PERS for short, I'm the type of person for many decades who worked on making sure that it was done the right way. Well, enter Wall Street and my Wall Street years. I started to see a long time ago that things are not always done on the up and up. And when you get into managing hundreds of millions and billions of dollars of other people's money, especially if there's a long period of time where there isn't really a lot of transparency and oversight, then bad things can happen and people can manipulate that environment. That actually led to me making a name for myself, not always good, on Wall Street, and it led to me leaving Wall Street and forming my own firm. The point of saying all of this is twofold. One is, as consumers, we can be led in, especially with commercials, and when we get some celebrity, maybe a famous quarterback or something comes and tells us, you need to be over here with financial firm X, or Y, or whatever. And it can be attractive and it can be enticing to be with the giant mega firm. But if you're following UnWoke and you're following the conversations we're having around where our money gets deployed and how it gets invested and spent and what we're funding with our dollars, then I think you probably see where I'm headed with this. We need to proceed with extreme caution and some skepticism. It doesn't mean that there aren't some good things to be taken from some of these giant mega financial firms. Some of the big investment managers, maybe some of them are fine. And some of the big banks, maybe some of them are okay. But overwhelmingly, I suggest the opposite approach is probably best for us. Start thinking small. Start thinking local again, even and maybe especially in banking, insurance, finance, investment management, because, as I've been making the argument for a long time now, Wall Street went woke. Wall Street, I can make the argument, I have been, in episodes like The Globalist Bubble and Parade of Woke Sameness. Those are titles of episodes. If you haven't seen them yet, go back and watch those. You can find them on UnWoke.academy. Those are episodes where I reveal the corralling of money into very few investments, and that's not healthy. What we've ended up with is an environment where we, the people, and I don't use that term exclusively to U.S. citizens, although that tends to be about 95% of my focus, is on the U.S. and U.S. citizens. But really, anybody anywhere should be alarmed by, on the global scale, the overwhelming, I'll argue, majority of money getting corralled into so few investments. We've never seen this degree of market consolidation, I don't believe, even including the Great Depression. And so here's what I mean by that. If you turn on the radio or a TV show or evening news, you're probably, on a roughly daily basis, you're going to get hit with that whole one or the other. The markets are up or the markets are down. And usually it's accompanied by some peppy, exciting music or some doom and gloom music. Today, the markets are up and hooray, the markets are hitting a high, etc. Well, let's put that in perspective and talk about how that's actually manipulating your mind. It's twisting you into believing things that aren't true. They aren't really the true market. Investment market. So I'm going to put this in some numbers that should make sense to you. If you've heard people talk about the S&P 500, the S&P 500, which is sort of used, I have to air quote this, as indicative or representative of the market is up. When they talk about the S&P 500, they're actually talking about 503 listings, 503 in total. And I continue to make the argument that that is an inflated and exaggerated sampling of the total overall investment market. And yes, we are going to get into the America First investment policy issued by Donald Trump on February 21st and where that factors in. But focusing for a moment on the S&P 500, you've got 503 issues represented. That's 503 total, and 8 of them represent about 40% of all the money in the S&P 500, and they're the usual suspects. You've got Microsoft, Apple, NVIDIA, and a handful of other ones. So let's say, and I ballpark, about 30-ish companies in total make up the lion's share of how the market, the S&P 500, gets invested. And it actually gets a little bit worse from there because there are a lot of people that base investing off of indexing. And that's really what that is. That little sampling of the overall market is called an index. S&P 500 is an index. It's twisted and conflated. It has been used and abused and now represents just a tiny little bit of the total opportunity for people to diversify and invest their portfolio. And within that, it's massively consolidated into just a few globalist companies. Well, if you are unwoke or thinking about going unwoke, those are the companies that you don't want to be invested in, or you shouldn't. And even if you are and you're fine with Apple and Microsoft and NVIDIA and all those, at what point do you recognize or would you feel that those stock prices are ridiculously exaggerated and they're overinflated? And you're investing at highs when we all know the old adage, you don't invest when it's at its peak or, well, now massively beyond its peak, which brings us to the rest of the market. I pulled up some numbers in preparation for this conversation. By the way, I am making sure to keep an eye on comments. If you do have a thought, comment, or question, I'm keeping tabs on those on all social media platforms. Again, we are live right now on X, YouTube, Facebook, and Rumble, and now added just this week. I figured out how to add a live stream on Substack. That Substack is UnWoke.academy. But in total, I should I'm tempted to make this a trivia question, see if anybody can look it up and be honest. Answer to yourself, but don't look it up. Don't use AI or search engine. How many total issues are on the New York Stock Exchange? The answer is roughly 8,000. You've got roughly 8,000 just on the New York Stock Exchange. And if you are looking at the S&P 500, you're dissecting 7,900, 7,500, excuse me, 7,500. I almost added a zero there in my mind. 7,500 different companies out there that have been cash starved and are being ignored. They have been for, I argue, 5+ years now. And they could be the next new great thing. And they could compete if they're given some capital and given the opportunity to compete in a fair marketplace. These are the types of companies that could disrupt and overtake and become the next Apple or Microsoft or Meta or you name it, Amazon. They've been cash starved, but that's just the New York Stock Exchange. NASDAQ, which is another exchange where you can buy and sell different issues, the NASDAQ has 3,890 for a total between just those two of 11,890, approximately 12,000 different issues. Those are different things that you could deploy your portfolio, your 401k or IRA or whatever, to help fund some of those businesses. And if you're looking for growth opportunity, that's where the growth opportunity exists in some of those companies. I continue to make the argument there isn't growth opportunity in Apple, Nvidia, Microsoft. And yes, it's possible that we could continue to buy into this insane argument that those stock prices should go nowhere but up for another decade or something. But I argue that just like lots of now questionable stocks like pharmaceutical, I'm going to get into that in a minute. Pharma makes a great example right now. Those investing more and more money, especially if you're in, let's say a 401k plan, and you are continuing to do payroll deduct and contributing each salary, each payroll into those companies as they continue to go up and up and up and up, as I argue they're artificially being propped up and artificially elevated stock price. That's not where you should be thinking about investing, especially if you don't want to invest in the woke stuff. So if you've got 12,000 possible different investment options out there, we're listening to the media and politicians and Wall Street and globalist banks tell us you only really need to be invested in roughly these 8 companies, like everybody else on Earth. And don't just never mind the fact that a long time ago, we stopped paying attention to what a realistic valuation of that company is. That's an insane marketplace. That is ludicrous. In my book, I argue that it is insanity. We can add other ones as well, like Chicago Board of Options Exchange, or CBOE, for another example. That has an estimated roughly 3,900. So just those 3 exchanges, and there are exchanges all over the world, just those 3 represent over 15,000 different things that your money might go to invest. By the way, I'm going to insert a note. This is not investment advice. This is showing you the research that goes into UnWoke Academy and the Financial PMA, how we do what we do, and the perspective that we use. Hopefully it resonates. Anybody anywhere can grab the information that we share and run with it. Do your own research, add to it, question your advisors, ask about better ways to deploy your money. As we like to say, diss the globalist left. Know where you donate, invest, or spend your money. If you don't, we'll continue to read things like yesterday's post from UnWoke Academy on a company called Tata Motors. I think that's the complete name, Tata Motors. TATA, that's the parent company of Jaguar. Jaguar Cars is down something like 97% because they went woke. Everybody's talking about it now. We've had it with Target. We've had it with Bud Light. We have lots of people who get upset with these companies and decide to boycott, but don't take that next step of looking at whether or not you, my listening audience, are invested in that same company that you're frustrated with and decide to boycott. I'm helping you to take that next step and evaluate. Yes, we are also, I know we have a lot to cover today. We're going to unpack the cost to you because there is a cost. Companies out there, especially financial companies, love hiding the fees that you pay. They bury it in places where you can't really see it. And it has this sort of okay feeling of sort of trudging along business as usual, giving all the responsibility and decision making to somebody else. And it can feel free because you're not seeing the cost, that the profit that they're taking from you. Part of the objective of today's call is to highlight the ways that you can expose that and understand what you're actually paying and what you're getting in exchange. I mentioned the globalist bubble, and that goes hand in glove with another episode that I did called Parade of Woke Sameness. In it, I expose the mechanisms, the methods that Wall Street, big financial firms love to use to corral people like you into funding the same investments effectively that everybody else has over and over again, and more and more and more money. As a side note, just to put that in perspective, it was reported recently that the CEOs of some of those companies in 2024, I think it was conclusion of 2024, received an annual bonus of nearly $17 million in stock. That's just, it's egregious and awful. When we have so much money flowing into so few companies that they can just lavish out these $17 million bonuses. And there are other companies out there that are languishing, they're suffocating and cash starved. That's where the opportunity comes in. One more note, and then I'm going to get on to how to uncover the fees and fee structure and know what you're paying. For heaven's sakes, as a starting point, understand what you're paying. We did it once recently for somebody. We gave them an alias of Yosemite Sam. For Yosemite Sam, we figured out they're paying about $8,000 per year in investment management fees and financial advisor fees. And what they're getting is an array of different investments that have massive overlap and are doing exactly what I'm describing. All kinds of different mutual funds and exchange traded funds. And the lion's share of the money was still just simply being invested in very few companies that everybody else is being invested in. That's not due diligence, and that's not service to the individual. That is, going back to my opening statement, my opening comment about professionals allowing ourselves to be caught up in this vortex of mega firm. That's allowing mega firm to be profit driven, controlled from the top down, and dictating protocols to financial advisors. We saw what happened during COVID when that was deployed in the healthcare arena. We saw big pharma exerting influence, undue influence, on mega hospitals, and those hospitals dictating protocol, and then virtually everybody out there being told they all had to have one of these 3 shots. The same thing, I argue, is taking place and has been taking place for a long time in the world of finance. There are all kinds of different brands and different labels and logos and different feel, but ultimately, if you've got a family of 100, your cousins, aunts, and uncles, and this is an experiment. It's worth making. If your entire family group or friend group have all kinds of different portfolios, and some of you might have a rollover IRA, a brokerage account online, or a contributory IRA, 401k, or 403b plan, whatever. If you lift the hood and figure out that all of you are invested in virtually the same thing with different logos and different investment manager names attached to them, that's not a real free market economy. That's collectivism in the financial world. It's not okay. So, on February 21st, Donald Trump issued the America First investment policy, and that throws down the gauntlet. It tells the financial world, cut it out. Stop corralling all of the money, or nearly all of the money, most of the money, into a very select, small number of globalist mega firms, and let's distribute that cash out appropriately to all kinds of different companies and give them the opportunity, give them the money and the breathing room to maybe become something big in the future. And anybody that knows anything about investing should know that some allocation, even if you're ultra conservative, you're very worried. Well, two things. One is the S&P 500, and I've continued to make the argument, is an inflated index. That's not where you should be thinking about investing if you were a very conservative, play it safe type of investor. But even for anybody, everybody, some little allocation, something into those companies makes a world of difference. It's what can remake America's middle class and remake and launch America First, hence the title from Donald Trump, the America First investment policy. You can look it up. I've actually done several episodes on it as well, like kind of unpack it and talk about what the America First investment policy actually is, how it works, what it's designed for. That's where we need to be talking about putting our money. So with the globalist left, know where you donate, invest, or spend your money. Imagine being part of the freedom economy, the new freedom economy, putting your money to work to help fund the next new thing, not Apple or Microsoft or Meta, which is the parent company of Facebook, or Amazon. I don't believe we should continue to fund those things. And certainly, there are a lot of people out there that agree with me. When you see things like go woke, go broke, and people get upset by those companies that go woke, like Disney. Are you invested in Disney? I'm going to show you how to find out. And I'm going to show you how to find out what it's costing you to invest the way that you are. The first thing to do, wherever you are, or when you actually, hold on a second here, I'm going to switch the background. I'm going to switch over to this one. This has been the background I've used for a few of the discussions we've had around the financial PMA. So the financial PMA is an option for you. There are all kinds of different options for you. If you don't want to be investing in the woke anymore, take this research, do your own, deploy it on your own. You can go online. There are great discount brokerage trading platforms. You can buy and sell. You can build your own portfolio and actually know what it's costing you and what you own, which should be a breath of fresh air for anybody. We also have Matt and Drew. I've got an arrangement that I've set up through UnWoke.academy. Matt and Drew are with a company not affiliated, but we do have an arrangement with, they're with Inspire Advisors. They're a terrific resource. Go back, watch some of the episodes. They've been on a few times as guests. They are financial planners who are not woke. They don't want to corral your money into the same handful of investments everybody else is being put into until and if that likely collapses. By the way, there's a side note there. When I talk about the S&P 500 and it being an inflated, manipulated index, I talk about how I believe that those numbers have to come down. And people ask me all the time, when do I predict that will happen? Well, I don't have a crystal ball, but I do think with this politically charged environment we find ourselves in and the vehemently rabid anti-Trump, I think what's likely to happen is the market, see, I fell into the same trap there. The S&P 500, which is a little tiny sliver of the market that everyone seems to want to focus on, I think that will be propped up and maintained up until just before midterm elections 2026. It will be allowed to drop. And pardon me, I'm going to take a sip of water. It will be allowed to drop. And then the left, politicians, media, etc., will try to blame Trump for it.
They'll try and hang that on Trump. I think that's all ridiculous. Trump has nothing to do with that. He is the person advocating for us getting back to funding real business enterprise and recreate, and bring back competition in the business world. Not those 8 companies co-owned by the same handful of globalist billionaires managing everything and trying to create this sort of global communism. And ultimately, that's what they're doing. I'm watching it happen real time. And get back to the prospect of regular, average, ordinary citizens coming up with a new idea, launching a business, and becoming successful at it. That's what we're talking about. That's what the America First investment policy is. So I want you to open a browser, and any browser will do, either now or the next time you're in front of a computer, and pull up a statement from wherever you do your investing. If you have a 401k plan, you're going to get those quarterly statements, and it's going to have a list of typically their mutual funds. Pull that up, and all you have to do is start entering the name of that mutual fund, or what's called the ticker symbol. The ticker symbol for mutual funds, it's always 5 letters ending with the letter X. Just enter that in your browser. You're going to start to get all sorts of information about how your money is actually being invested. So that Fidelity fund, or the BlackRock fund, or the Vanguard fund, or whatever, whoever the money manager is, that investment manager, on a fairly regular basis, they disclose to the world how they're actually investing the money. Well, I've been calling them out for 4 years now, plus. Actually, the beginnings of my talking about ESG goes back about 10 years. So I've been calling it out for a long time. Many of those managers, or probably most of the really large ones, they went woke and drank the Kool-Aid, and they are allowing the money to be corralled into an never-ending flow of money into a very small number of globalist companies. When you look it up, one of the things you're going to see connected to whatever that investment is something called an expense ratio, or ER for short. The expense ratio of a mutual fund is simply a statement of the cost to you. So let's just round up and call it 1%. It's probably typical to assume that it's going to be 0.5% or more. All you need to do is take whatever that mutual fund is, however much money you have in it, and multiply it by that figure. Is it 0.5%? So when you do that for each of your investments, and you can just ballpark, just do it back of the napkin, ballpark the combination of all those different funds and how you're being invested, then make sure to add, if it's 401k, you're going to have some additional fees. That fee disclosure that comes to you is going to be probably on an annual basis, and it shows all the other people that get paid on your 401k. For anybody that's nerdy like me out there, that is actually called a 404A5. That's the form. Not to be confused, if you work in business administration, that's a 408B2. Sorry, that's the technical nerd in me. Whichever of those documents you pull, you'll be able to pull from that a figure of how much it costs you to invest in the way that you do. Wherever you are, 401k or otherwise, figure out what those fees are. If you're outside of a 401k, you will have probably the same 2 different fees. One is for investment management, whatever the mutual fund charges you to manage your money for you. And you may also have an advisory fee. It pays to understand what that is. So using that example that I gave of Yosemite Sam, that's an episode. Go back and watch Yosemite Sam. We show you the steps that we took and how we did the math, and you can duplicate that. Again, we're pretty technical, and I use spreadsheets, and I get pretty exact. You don't have to do that. And just pull out a blank sheet of paper and write a couple of ballparks. Even if you think, you looked at your statement a month ago and you remember it being somewhere around $50,000. Whatever it is, just jot down a ballpark, look up that fund, and multiply by that. And if you're spending 7,000, 10,000, I've seen lots of people spending 15, 20, $40,000 per year. It's just subtracted from your account on an ongoing basis. So when you think about how much money you're saving for retirement or whatever your future plans are, consider that, because the more you can impact that, and if you can lower those fees, all things being equal, you're better off. If you need help, and lots of people do, and probably actually more people should ask for it, but make sure that the help that you're getting is reasonable and that the fees are reasonable and that what you're getting in exchange isn't simply just this. I'm going to go back to the analogy. It's like the COVID shot in finance, just injecting everybody's portfolio with those 8-ish companies over and over again. It makes massive profit for certain financial advisors willing to sell their soul and financial institutions that push it. They make incredible amounts of money because they don't actually have to do work. They don't have to consider what's in it. They don't have to do research or due diligence. They don't have to do anything. They just sit around and tell everybody that this woke fund E, whatever, that's where your money should go, because the woke fund, boy, look at it last quarter. It did 9% or whatever, and they just tell you these figures. And it's fiction. It is us allowing our money to continue to be shoveled into inflated stock prices. So just to give perspective on this, these are company names of some of the companies. This actually is a live portfolio for somebody that joined the Financial PMA. This is actually what it looks like. And we have a spreadsheet. We have a secure shared folder that we share this in. And wherever this person wants to do their trading, they invest certain amounts. And you can see I actually have fairly recent numbers. With this person, this is a diversified portfolio. Lots of different companies in many different market sectors. This is what a portfolio should look like. Yes, I do get questions all the time from people asking if they should invest in gold or silver or cryptocurrency. And the answer is, if you want some part of your portfolio, a portion of it, invested in those things, then great. Do your research. Join the conversations all over at the Financial PMA or online, anywhere and everywhere. There are people talking about those things, but they are not a total answer. I firmly argue that putting all your money in gold or putting all your money in silver or putting all your money in crypto is a fool's errand. It's not the answer. The answer, I believe, for a variety of reasons, is let's put to good use the America First investment policy. Let's fund those companies out there that are forming the freedom economy, that stand to possibly be the next new great thing. Let's not continue to fund the companies that are crushing their competition, those 8-ish companies out there that are vastly overfunded right now. They are killing their competition, and we're allowing it. We're not only allowing it, we're funding it. We need to cut that out. That's the whole purpose behind UnWoke.academy. The Financial PMA was born out of that because there were lots of people start asking questions. They were enjoying the research, but asking, where do we go next? Along the way, we've had great interviews with people like Justin Bernier from the National Security Index, Matt Tuttle from Tuttle Capital, and others who represent things that we should be considering, that we should be looking at as better investment opportunities than going into the woke left stuff. So in this portfolio that you see behind me, this person, I actually personally was involved in assisting on the trades on October 7th and October 8th of 2024. And through June 16th, the larger of them was up 38.54%. That was an unrealized gain at this point of 38.54%. During the same period of time, those indexes that we're told should somehow represent the market, that they don't. The S&P 500 was up less than 3%, although even that is fiction in my book. And the Dow Jones Industrial Average was up, I want to say 0.96%, which reminds me, I should have also added Dow Jones um, and come up with a number of stocks that are represented in the Dow Jones. Anyway, you get the picture here. This is where we need to be talking about. This is America First, and lots of companies like it. So we're going to talk about these, we monitor these, we explore these. This whole thing, first of all, go over and check out the Financial PMA. Take everything that you see here at UnWoke.academy, the Financial PMA, and run with it wherever you are. The mission is for us, we the people, to take back the reins of finance and get back to funding what matters, which is a free market economy. It's not funding those 8 companies that are co-owned by the same 30 or so, whatever it is, billionaires. They profit from us losing competition. Competition is good. We need to have the funding mechanism, the vehicles to fund what could be the next new thing, what could be the vibrant new economy of the future. That's what we're after. That's what everybody that talks about freedom economy is longing for. We get there by funding it. So I want to give one more reference, and that this has to do with when I first went to Wall Street. I started working on Wall Street and doing what I do, was starting to do analysis of different investment managers and reporting on them for big pools of money. As I said at the beginning of the conversation, that's my niche within finance. When it comes to the management of other people's money, there's a due diligence process, and I specialize in that. And when I started doing that, I got a call from a reporter at the Wall Street Journal. Apparently, my name had made its rounds. I was working on some very big stuff, like some state-run pensions for state employees and things like that. And I was told, and still to this day, this bothers me, I was told by the firm that I had to work there for 5 years before I could answer a reporter's questions, which is ridiculous because I had well more than 5 years of experience. And I was specifically recruited to Wall Street to do exactly what I was doing. So anyway, I did not get included in that. But ultimately, when I left Wall Street, and this may be one of the most important elements of the conversation today, when I left Wall Street and went independent, I shed and got rid of that requirement that I follow orders from some boss somewhere. That's what led to, ultimately, all the things that I've been able to do and say and talk about. I could not have this conversation if I worked on Wall Street. There's no chance. Ultimately, some powerful bad actors figured out a way to attack me. It's indirect. They actually have been sicking their regulators on me. These regulators, I'm in year 4 of battles with regulators, but whatever, it's par for the course, I guess. I'm willing to make that sacrifice to be able to have a voice. But the same thing holds true in all professional arena. If you get somebody out there that's willing to challenge the narrative, and again, the COVID jabs make a great example. And I specifically referenced America's Frontline Doctors when I launched and went independent. They make a very good model for people like me who have gone in, seen what it's like. I've witnessed the skeletons in the closet, and I've seen the shortcuts, and I've seen with great misgiving, I've seen the misuse and abuse of other people's money. So I left Wall Street, and I gained the ability to have a free and independent voice. That bothers some people. It bothers a lot of people. They don't want me doing exposés on BlackRock and Vanguard and companies like them. but I don't care. There need to be people out here in all sorts of different arenas: news, journalism, healthcare, medicine, food, agriculture. There have to be people willing to stand up to the cabal and challenge the narrative. I didn't dream that for myself. I didn't launch my company over a decade ago wanting this, but here I am, and I'm willing to pick up this mantle and run with it. So just like there are people out there, and I love them. If you're one of these people, I love it. Keep it up. Who talk about health and nutrition and diet and exercise, and they uncover. I forget the guy's name. He says there's an amazing guy with social media presence who does these huge expose on like the companies that make the breads that we eat, and how it turns out there's like one company that owns 95% of all the different bread brands and things like that. It is hugely beneficial to society to have people like that willing to challenge the narrative and get the information out. And I count myself among them. I don't know why. I don't know how. As I said, I didn't plan on it, but I'm willing to pick up that mantle and run with it. But this is just information. What you do with it is up to you. If you're one of those people, and education is another great example. I've been very involved. By the way, as a side note, if you have Newsmax, there's a documentary called Transforming America. I actually factor into that documentary. There's some snips from some comments that I've made in a volunteer role that I had for years, fighting for a return to proper education in K through 12. Pardon me. But in all these environments, if we continue to just follow whatever narrative is given, we will end up vastly poorer and unhealthy and uneducated. Let's fight back. That's the purpose and point of UnWoke Academy. If you're not a member of the financial PMA, no big deal. Take what you've got. If you want to become a member, we'd love to have you. The total for that is $1,000. That is, again, go back to what I was talking about earlier. Compare what you're currently spending. Just know that wherever you end up going from here. Use what I have exposed. Use your browser to figure out what your current costs are. For heaven's sakes, know that as a starting point. My sense is that the $1,000 across the board to get the whole package deal is a huge cost savings, but that is not a requirement. Take everything that we're doing and run with it, go somewhere else, form a new PMA, copy what we're doing, talk to your financial advisor and duplicate the efforts. Because ultimately, at the end of the day, the initiative, the mission is to defund the woke. Let's stop funding the things that are harming America and Western society and start funding the things that stand to gain and build the freedom economy of the future. With that, I'm going to bid a fond adieu. This has been another Wednesday special edition focused on the financial PMA. If you've joined us from Substack, Rumble, X, YouTube, or Facebook, know that this has actually been recorded. I will do a little bit of editing. I had the intro, and this will be posted on OBBM Network, X, and a variety of different other platforms, along with UnWoke Academy, within the next day or two. In the meantime, hope you have a great day. Take care.